Current market is very challenging, but I think it is a very good time to launch a private equity fund. There's a lot of volatility in the current market, and there are a lot of challenges. A lot of private equity managers may not be able to raise $50-100 million, but doesn't mean that having a 10, 15, 20 million is not a good private equity fund. You need to determine your niche investment strategy and try to sell that. And the private equity market is mature and growing also at the same time, and you just need to emerging private equity managers needs to understand that how they can capitalize this current volatile environment to launch the fund. I have seen recently a lot of private equity fund launches than the hedge funds. Why? Because interest rates are going higher, and the liquid markets and the stock market, equity market is volatile, and investors, particularly institutional investors, are looking for diversification, and they want to get their returns on risk-adjusted basis, and they are allocating their capital away from the equity market into the private equity market at this moment. So it is a good time to launch a private equity fund and raise a reasonable amount of capital. You need a product or strategy the investors wants to buy. You need to know your target market: high net worth individuals, family offices, institutional investor, friends and family. Having a market message which is compelling and easy to understand. Allocate the time during the day to marketing. I would say the first thing is that you need to offer your value proposition. Second most important thing is you need to be very transparent with the prospective investors. And third is act institutional from the outset. You need to establish good business practices and risk management policies for the fund. These are the good practices to have, because you want to make sure that your fund is ready for the institutional money. You may not be able to raise institutional capital from the beginning, but as you progress towards the fund cycle and you have couple of years under your belt, you need to target institutional investors, because that's the only way you can raise a lot of capital. But in order to do that, you need to act institutional from the outset. You should have all the best business practices, risk management policies in place, so that way you can convince institutions that their money is safe here, and you will follow the best business practices in the industry. Putting together a valuation policy for valuing those investments is a key for the private equity funds. Bigger private equity funds hire the third-party valuation firms to value their portfolio quarterly or annually. But having your own valuation policies and procedure is a key to get a good finalized audit at the year end, because when auditors will come and review your books, they want to see that you are not doing a cherry picking. And if you are registered with SEC and SEC is examining your books and records, they will also determine that how good your valuation policies are, because these valuation policies are a key for your rate of return. So make sure you are following all the best practices in determining those valuation policies for your portfolio.